So this on your screen is a summary of what we have observed from the Harvey company's 2-year income statement by comparing absorption costing and the variable costing. So here's the relationship between production and sales, and here is the effect on inventories, and here is the relationship between variable and absorption costing. So if unit produced and unit sold are equal, then there's going to be no effect on ending inventories, no change in inventories at all, and the absorption costing sorry net operating income will be exactly equal to the variable costing net operating income. The next point is, what if unit produced are greater than unit sold? It means the cost will be deferred to the next point, which means absorption costing, when cost is deferred to the next year, so this year cost will be lower. So it means absorption costing income statement will net operating income will be higher from variable costing, right? And in that case, because cost is deferred, so that cost will go to increase our inventory figures. The last point is that, what if unit produced less than unit sold? It means we sold higher than we produced. In that case, inventory gonna be decreases because we sell more than we produce. It means our inventory gonna be used, so that inventory is gonna be decreased. And in that case, absorption costing net operating income will be lower than variable costing net operating income. Okay, so that's all from the summary of key points for comparing or reconciliation of absorption costing net operating income and variable costing net operating income. So here I have pasted exercise 7.3, page 295. So I just want you to pause the screen here and try to solve the question, and I will be pasting its solution on our WeChat discussion form as well. So first you need to pause the video and try to solve by yourself, and then compare your answers on the solution posted in WeChat group. So now we are starting our learning objective 4, which is understand the advantage and the disadvantage of both variable costing and absorption costing. So let's explore further, and that is, so impact on the managers. So number 1, the opponents of absorption costing argue that the shifting fixed manufacturing overhead cost between periods can lead to faulty decisions. So these basically opponents also argue that variable costing income statements are easier to understand because net operating income is only affected by the changes in units sold. So these produces net operating income figures that are consistent with the manager's expectations. So basically the opponents, they argue that if we shift our fixed manufacturing overhead from period 1 to period 2, then if we are having decisions based on net operating income, then cost will be increased in year 2, and that will basically disturb our decision making in year 2 as well. So that's why the managers, they prefer variable costing, because it shows the true of net operating income for that period. So if we see the CVP analysis, so absorption costing does not cope up or dovetail with the CVP analysis, nor it supports the decision making because it treats all the fixed manufacturing overhead as a variable cost, and it assigns per unit fixed manufacturing overhead cost to production. So what happened? Treating fixed manufacturing overhead as a variable cost can lead to a faulty pricing decisions and faulty keep or drop decision making, which we will learn in our relevant costing methods. And assigning per unit fixed manufacturing overhead cost to production can potentially produce positive net income even when the number of units sold is less than the break even. So that is amazing. So that's why managers, they do not prefer absorption costing for making some crucial decisions. So now question arises, then why we see absorption costing? The answer is absorption costing is required for external reporting in countries like US as well. So to confirm the GAAP requirement, which is generally accepted accounting principles, absorption costing must be used for external financial reports in the US as well. Plus, so that income statement will be also be used for tax purposes as well. So under the Tax Reform Act 1986, absorption costing must be used when filing out income tax return. Plus, since the top executives are typically evaluated based on earnings reported to shareholders in external reporting, they may feel that decisions should be based on absorption costing data. So that is the biggest point, that why still the managers are making net operating income or calculating net operating income from absorption costing. There are three basically points. So now heading towards the other part of our learning objective, that is advantages of variable costing and the contribution approach. So number one is that the data required for CVP analysis can be taken directly from contribution format income statement, right? We just pick the data and you can find out that what decisions to be made, and that's it. You don't need to go through some extra calculations. Like if you have absorption costing, then you need to segregate among the manufacturing overhead that which part is variable and which part is fixed. So with the variable costing, you do not have to do this kind of stuff. Plus, net operating income is closer to net cash flows. So that is very nice because you are not deferring the cost to the next period. So that's why your net operating income is basically is equal or very closer to our net cash flows. Plus, managers often assume that unit product cost or variable cost under variable costing assumption. So in that case, this is also can be used as a base point for decision making, right? And it is consistent with the standard cost and flexible budgeting we will discuss in our budget section. Plus, it is easier to estimate profitability of the product and the segments. Again, CVP analysis. And profits are not affected by the changes in inventory, because in that case, our ending inventory, our beginning inventory is also multiplied with the variable cost, not the fixed cost, right? Plus, the impact of fixed cost on the profit emphasized. So in that case, if you want to find out that the fixed cost, so let me just redefine this part, that the fixed cost appears explicitly on the contribution format of the income statement, Thus, the impact of the fixed cost on the profit is emphasized, which means you can just see that how this fixed cost is going to affect my profit. But if I reduce my fixed cost, can I be able to increase my profit up to greater extent? So you can just find out different kind of strategies mix. So with all of these advantage of the variable costing that we just learned in our previous slide, then why absorption costing is still so prevalent? So one reason in addition to external reporting relates to the matching principle, and that advocates that it is better uh, match cost with the revenue. So the proponents of the absorption costing, they contend that fixed manufacturing costs are just as essential to manufacturing product as are the variable cost, right? So but the variable costing people, they argue that the fixed cost are capacity cost and will be incurred even if nothing is produced, right? So that is basically the variable versus versus absorption costing assumption. Why still absorption costing is prevalent? One idea is that whatsoever the cost is, these costs are a part of production, while the other things that even if we do not produce, we still have to pay. So that is fixed in nature.